Hi students, welcome back to the social studies class, and we are continuing our economics chapter money and credit. In the previous class we discussed about how the loan is taken, how the medium of money act as a medium of transactions, and we discussed about RBI. Okay, we discussed about demand deposits, check and all. Now we discussed present topic. We are going to discuss about terms of credit. Okay, what are the various terms of credit? Okay, right. See, we all know that in order to borrow money from the bank, when we are going to borrow money from the bank charges interest, high interest on us. Okay, so we have to pay back interest along with the principal amount, the amount which we are taking. On that we have to pay the interest also. Apart from that, bank takes or asks certain other things, other documents. Those documents are known as collateral. Now, what may be those documents? What are those? What comes under collateral? It may be your land paper, okay, house paper, it may be your vehicle paper, it may be your gold or jewelry, okay, like this all comes under collateral. Okay, now why bank takes collateral? Why do bank want collateral? Now bank takes collateral in order to maintain security against the loan which it is giving to the borrower. Okay, now in the case, what happened? In the case, if the person who has taken the loan from the bank, if he or she is not able to repay back the loan, okay, then in those cases, in certain cases, the bank has the right to sell those collateral and take the amount how much it has given the loan. Okay, for example, we have deposited a collateral of 10 lakh rupees, worth of 10 lakh rupees, and we have taken loan of 5 to 8 lakh rupees. Okay, now and adding interest on that, it became 8.5 or 9 lakh rupees. Now suppose we are unable to pay back those loans, so bank may sell those land and the extra money it will repay back to you. How much money it has to take? Okay, adding interest and all, it will take remaining money, it will pay back to you. Okay, so collateral is very important in order to take the loan from. Okay, because there are many people who doesn't pay the money and they escape without paying the loan. So in order to avoid the loss, and to maintain the security and to continue the transactions of the bank takes as a security certain documents. Those documents of land, property, vehicle, house, okay, gold, ornaments, all those documents to total are collectively known as a collateral in the terms of banking. Okay, next, in our country we have various forms of sectors from where we can obtain the loan. So now let us learn about formal and informal sectors of credit. Okay. Yes, we have formal and informal sectors of credit. Let us make the difference about formal and informal sectors of credit. Formal sector, informal sector. Right. We will see the differences also. What are the difference in formal sector and in informal sector? Now, students, Formal sector means all the banks and cooperative societies. Means all the banks, all the banks which run under the guidelines of RBI. All the banks which has been established and authorized by RBI or follow the guidelines of RBI. All the banks and cooperatives. They all comes under formal sectors. Now what comes under informal sector? If you take the loan or if you borrow the money from your relatives, okay, friend, relatives, employer, money lender, etc. You can take, okay, all this comes under informal sectors of credit. Okay, now formal sectors of credit, nothing but here you have a fixed interest rate, though it varies from banks to banks, but it is fixed. Okay, it is fluctuating sometime. Okay, so but it is not very high. Okay, here what happened, if you take, it may be from 8 to maximum 16%, but here it is 20 to 25 or above. It depends upon the person who is giving the loan. It depends. There is no any exact fixed amount. He may charge how much he will and wish. Okay. Now here in formal sectors, RBI, what happens? RBI has given certain guidelines. This formal sector has to work as per the guidelines. The RBI directs these formal sector banks to provide loans not only to the rich people, even the poor and needy people also, farmers and peasants also. They have to maintain the data and records. They have to proceed. They have to provide to RBI annually that this much of loans they have given in various sectors. They have to maintain the data. The formal sector has to maintain the data, whereas informal sector no need to maintain any data. They no organization like in formal sector we have RBI to check the or monitor the loan procedures of these credit procedures of the formal sectors, but in informal sectors we don't have any such organization to monitor the loan process. That is why what happened, the people who takes loan from the informal sector get trapped in the debt trap, or the reason is that the loan percentage or the interest rate is very high. The income which they earn, most of the income they have to spend in repaying back the interest on the loan which they have borrowed. Okay, there is no fixed date and or any time this informal people may demand, pressurize you to pay back the loan, whereas there is particular procedure, particular date, but number of days and years and months time is given to the borrower to pay back the loan. Sometimes even extra days and months are also given to these people in the formal sector, but all those things doesn't happen in informal sectors. Okay, now mostly we see in our country in rural areas, backward areas, what happen? People go to take loan from the informal sectors only. The reason is that we see most of the farmers in our country are illiterate. Okay, so they feel insecure to deposit their land documents and all. And there are a lot of paperwork also while taking the loan from the formal sector. So to avoid all those paperwork, delay, time processing and all. Okay, they go to the informal sector, and this informal sector they doesn't require any form of collateral. Okay, because they may be from that village or nearby village. They may be knowing them personally. Okay, so they give loan without any document, without any collateral, without any security. So it is very easy for the farmer to obtain the loan from the informal sector. But the interest rate is very high that they are not understanding, and they are getting trapped in that debt rate. But we see in the urban areas, educated people, rich people, working people, they go to the formal sector to take the loan. Now in present generation, most of the people they take the loan for day-to-day activity also, for purchasing small things of the house like vehicles or so many things. Okay, so they go to the formal sector and they fulfill all the required documents and they take the loan from the formal sector, and the rate of interest is less when compared to the informal sector. Okay, that is so. Now RBI is trying to spread the banking system, the informal sector system even in the rural areas, so that the number of people who are going toward the informal sector should reduce, and it is trying to reduce the paperwork also, so that this illiterate farmer should come back to the formal sector to take the loan. Because mostly we see in our country those farmers and the peasants, they require small amount of loan in thousands and hundreds, okay, for agricultural season, for buying seeds, pesticide, fertilizer, pump sets, agricultural implements and all. Okay, so what happened? And they may pay back the money after 1 or 2 agricultural season also, that is 3 to 6 months duration. So the RBI is trying to establish cooperatives, Gramin banks and all in the rural areas, so that the people start coming to the formal sectors to take the loan and avoid going to the informal sector, and by which their income should be increased, their income should be maximized. They should not waste their income in paying back the loans to the informal sectors. Okay, so such one example I will give you from our book is self-help group is mentioned here. Okay, self-help group, that is SHG, self group, SHGs, self-help groups. What is self-help group? Self, helping ourselves. Okay, now in rural areas, in villages, especially among the women, this movement has been started on a large scale. So what happened here? The group of people, women especially, from 15 to maximum 20 to 25, 15 or 20 or maximum 25, like this. Okay, they come together. They start donating among themselves from 10 to 100 rupees. Okay, and they collect and they open one bank on the name of the organization. Okay, some organization name they will keep, and they will open an account, they will deposit in that. Now suppose from this 15 or 20 or 25 member, how many may be in that group, if anyone have any need of money, so they may take loan from here, they may withdraw from here with less interest than the bank also. Now here what happened, as the year passes, amount in the bank increases. Okay, now when amount in the bank increases, the bank start giving loan to these people. If the organization want more loan, then the amount which they have deposited in that, then the bank start giving loan to this organization. Okay, and they can meet their regular needs and all. Mostly we can see in the villages, the people they require such loans for their like agricultural needs or any festivals, marriage ceremonies and all, or you can see mostly villages, women and all, mostly they are lacking malnutrition and all. They are like the time of pregnancy and all, they require money and all. So during all those time, this self-help group is offering. So it has become a very, very useful and a initiative step taken to encourage a type of saving among the women, a type of self-dependency, need not depend upon other people or any other organization. Because if they go personally, they have to provide certain document, collateral in the bank to obtain the loan. But in a group, if they go, or the organization, if it is well established after certain years, by seeing the credit of that organization, the bank is giving the loan. Otherwise, they themselves, among themselves, giving the loan to each other and helping each other. So this is very, very useful and initiative step taken in the rural areas. Like this only, Gramin Bank of Bangladesh also helped the poor section of the society to come up. Nearly 40,000 villages in Bangladesh having account in Gramin Bank, and mostly all are poor people, so that they can get loan from that for their day-to-day requirement or the things which they need in their daily life. So it is very good initiative in our countries also. The RBI has to come forward and it has to establish more number of cooperatives and Gramin banks in various rural areas, so that the people of that particular area or the rural area people, especially farmers and all, they should not go to the money lender. They should avoid going to the money lender or informal sectors of credit to take the loan or to pay high amount of interest. They should come back to the farmer sector to avoid high interest rate. So it is RBI and the government should take such initiatives. So students, that's all for today. Take care. Bye.